Hello and welcome back to another edition of Lipper's Fund Flows Insight. I'm Matthew Lemieux. This week we're looking at fund flows for the week ending December 12th. And as the holidays approach and the end of 2012 is upon us, investors continue to focus towards Washington and look towards Congress and the White House to come to some kind of negotiation on how to deal with the looming fiscal cliff. We've seen basically on an hour-by-hour, day-by-day basis news conferences that instill hope or, again, become a little bit more ambiguous on whether they're going to come up with a deal. But overall, markets seem to see and feel that we were going to reach a deal by the end of the year. From a Wednesday to Wednesday period, we saw most of the major markets up over 1.3%, even though we saw a little weakness on Thursday and today. And on top of that, we did see some mixed but probably good news on employment numbers as non-farm payrolls came up above expectations in November. There was some revisions down in October, and then today we did see that unemployment claims were down. So some mixed news, but again, I think most of the investors' focus were on Washington, really trying to kind of anticipate what kind of decision they'll get out of the fiscal cliff deal. Will there be tax increases? I'm thinking that there probably will. What will those take on? And what kind of spending cuts will we see? So we'll have to see how that goes. But let's take a look at the fund flows numbers to see how they translated with all of this news in the markets. If we actually look at the overall numbers, we see overall mutual funds pulled in $1.2 billion for the week. Of that, money market funds took in the majority at $4 billion. And again, we see equity funds on the outflow at $3.7 billion, again, for mutual funds. Taxable bond funds continue to bring in inflows at $700 million. And municipal debt can maintain steady inflows at about $200 million. So overall, we saw inflows coming into the traditional mutual fund market. Again, most of those going to money market funds. We've seen a couple weeks of that. We'll talk a little bit more. But let's take a look at equity. Again, equity group has continued to struggle. This week, we see $3.7 billion out, and that's the fifth consecutive week of outflows for this group. But if you look at the split out, it's a very different story. I mean, it's a very different story between domestic and non-domestic. Domestic funds, again, the brunt of the outflows, $3.2 billion. This is the 21st consecutive week of outflows for domestic equity. Non-domestic, traditionally they've done a little bit better, but this week we saw $500 million out of that group. This was the third week again for there. So a lot of basically moves out of equity mutual funds. But again, as we've seen in the very many past weeks, is that it seems to be a different story when you look at the other product lineup of equity ETFs. If you look at it this week, we saw a stunning $8.7 billion going into equity ETFs. And this is actually the third consecutive week that we have seen over $7 billion per week going into this group. And once again, SPY, Spider S&P 500, brought in $3.9 billion, but it was really buying across the board. We also saw about $1.6 billion going into iShares Emerging Market Fund, about $1.2 billion going into iShares S&P 500 core product, as well as money going into the iShares Russell 2000 and the Triple Q product. So across the board, investors, if they're going into equity, they really feel like they're just going to buy the market across the board. We've seen a lot of the bigger, more liquid and more used ETFs bringing in assets. Again, maybe not much of a sentiment play there that they think the market's really going in the right direction. Maybe they're just looking for a good place to park some excess cash and wait out the year with these beta plays. So the next group we're going to look at is taxable bond funds. As I said, taxable bond funds really has been the story for this year as well as years past. And this week we continue to see inflows in there, about $700 million. This is the sixth consecutive week for taxable bond funds, since we did see a hiccup about 7 weeks ago. Of the group, though, investors continue to feel more comfortable with higher quality products. Investment grade bond funds brought in $1 billion. This is actually the 26th consecutive week of inflows for investment grade. Last week we saw an outflow, I think about 7 weeks ago. I think it was really a lot of outflows at a high yield that really brought down the group, but we continue to see investors going to investment grade. Of the other two groups, we still continue to see flows into mortgages, about $148 million. And high yield this week, actually, it looked like some selective selling, no big news on there, but we saw about $39 million going out. Really no shift in sentiment one way or the other. Again, it looked like just some selective selling. But then let's look at the ETFs for the taxable bond side. ETFs brought in almost the same amount as the mutual funds, $570 million, so just a little bit under that. And within this, we actually saw some action with the high yield. Overall high yield brought about $300 million, most evenly split between HYG and J&K. They both brought in a little over $100 million. And then there was also buying in investment grade there. We saw LQD, iShares, iBox investment grade product bring in about $120 million as well. So even though we're not seeing quite the same volume in taxable bond ETFs, there's still inflows there as compared to the equity ETFs where we're seeing a lot of volume. But overall, investors feel comfortable going into these type of products as the year comes to an end. Third group we're going to talk about is municipal debt funds. Municipal debt funds have had a great run this year. Again, inflows around $200 million. This is the 6th consecutive week for this group. And if you look at the breakout, we have national munis, $161 million, but a subgroup of that is high yield muni, which really brought in the majority of the inflows at $156 million. And really what that tells us is that investors are continuing to seek yield. Even in the more safer or less risky areas of muni debt, they feel comfortable kind of reach out to those lower quality products, and so we put $156 million into there. If you actually look at munis as a whole for mutual funds, so far this year we've seen a staggering $48 billion going into that group. We've seen higher amounts going into that in 2009, but again, very strong, especially compared to last year. We saw net outflows for the entire year. So the last group we're going to talk about is money market funds. Now this week we saw $4 billion go into money market funds, and this is the 4th consecutive week. Not as much volume this week as we've seen the last couple weeks, but overall that 4-week period, we've seen $66 billion move into this group. So again, maybe part of the story there is concern about the fiscal cliff. We're coming to the end of the year. Maybe investors are feeling comfortable putting their money to the sidelines, those that aren't going to, say, an equity ETF type product, and are going to wait out to see how this fiscal cliff comes out, how the decision on the fiscal cliff comes out, how that's going to affect their portfolio and investment decisions going into the new year. So overall, similar stories we've seen the last couple of weeks. The big news for investors is, of course, the policymakers in Washington. So we'll have to really see, because this is a really dynamic situation, because again, as I mentioned, hour to hour, day to day, it seems like we might hear some different news on whether they're closer, whether it's not going to happen. And so as we get closer, we got 2 more weeks till the end of the year. I think a lot of the investor moves, if we see any within fund flows for mutual funds and ETFs, will really be based on what we hear out of Washington. So we'll have to kind of keep in tune to that. If you'd like to take a look at some of these numbers that we go over and take maybe a deeper dive, you can access this data at our website. It's www.lipperusfundflows.com. Again, it'll give you an idea of what's available, but otherwise you can come back and visit us next week as we go over the numbers and see really how they played out with the information on the fiscal cliff. So until then, my name is Matthew Lemieux, and thank you for joining us at Lipper's Fund Flows Insight.